Convening about 300 global and regional experts, regulators, law firms, issuers and rating agencies, the East Africa Capital Markets Forum was the first of its kind, drawing on experiences and best practices from participants from different countries.
Last year, the IFC became the first foreign entity to issue a local currency bond on the Rwandan Stock Exchange, demonstrating again that the best thought leaders, in many cases, are also action leaders.
The 4-year-old stock market has 6 listed companies whose shares trading contributed 55.5% to the market's total turnover. Domestic investors have so far occupied a high portion of market participation with 77% compared to East Africa's 20.6% and the rest of the world's 2.4%.
You have this funding gap and there's a lot of capital available to actually fill that gap. The question is, how do you channel it to those companies? Those funds they're international funds, and as you've noted, they're local funds. Again, you have to find a way to give people confidence that they should allocate their money to those companies. If that confidence is there, they will. How will the locals in turn benefit? Well, aside from being fund providers, they actually also can take an equity stake in these companies eventually, right?
Originally, the issues were about infrastructure. Transferring shares, you had to transport them on a bus, have them in a physical format. First of all, in Nairobi, they are immobilized. You have to turn them into physical securities. Then you transport them to Rwanda, and vice versa if you wanted to trade those securities. The other problem was that most of the companies that come to the market, they are not doing an IPO, so they are cross-listing by way of introduction. So meaning that mainly people are not looking at the company from a point of view of a company bringing new shares into the market. So that causes them to not really participate that much as they do participate in new issues. If you compare the counters of Rwanda Stock Exchange, Brailo, or Bank of Kigali, for them they came through IPOs and they have more volumes. The main issue we have realized now after easing the issue of transferring the shares is that one of awareness. The awareness is not good enough, and we are doing a lot to correct that. The low trading on cross-listed securities is not only on cross-listed securities, because also the liquidity in other counters is not as big either. So there is one issue of public awareness of asking people to join the market in numbers. Today, currently, our market, we have about 14,000 accounts. That's not good enough to sustain liquidity on a market.
The financial sector of Rwanda has, however, greatly improved, with 72% of Rwandan adults financially included, 42% of the Rwandan population in the formal financial system, and 58% using informal financial mechanisms.
Do you get fresh money to create investments which eventually will come onto the market and be marquee listings, or do you already have maybe unorganized but investments in businesses already in different parts of the economy? And really, my take here is, while this is not this or that, most of us have unorganized investments in the form of small and medium that exist in different parts of the economy already. And to me, therefore, transforming this as a pipeline into the capital market gives that vibrancy for the pipeline of investments that the market can actually work with. And on the other hand, where is the demand coming from? So, of course, my co-panelists talked about retail savers and bringing them in, but it's also about bringing domestic institutions in. And again, there is a role for policy here. And it's not really about financial assistance, but it is about how policy can nudge, whether it's provident fund money, retirement money, etc. If it's local savings, then their bet on the local investment capacity creation has to certainly be there first.
Rwanda issued its first international bond in 2013, highlighting its recovery and how voracious investor appetite for high-yielding debt is helping countries make their debuts on global bond markets.
Within the aid, in the case of Rwanda, as you mentioned right from the beginning, in 2013, we had done everything right in terms of all the agreements of how the money was supposed to be used within the government. But still, the givers of the money decides to stop the money despite doing everything right. For the market, usually once you do everything right that is required, the trust is still there. That means they cannot all stop at the same time unless there is something else. And that's the point he was trying to really, that risk is heavier when you're using the donor money. And that's why the point that is made by Georgina, which is very, very important, is saying, how fast can we build the market so that it can take over to avoid the bigger risk?
In what capped the events of the East Africa Capital Markets Conference, the International Finance Corporation, the private sector lending arm of the World Bank, issued Rwanda's first offshore bond in Rwandan francs. To elaborate on the need for such an event in the capital market world, Rwanda's President Paul Kagame challenged panelists on the difference between markets and foreign aid.
Markets are markets. We know what they have for us, outweighing what we have in aid by thousands of times, please. So why do we leave something here that we know is more important for us by any measure and account? And then we start saying, no, but let's not even make a comparison. You see, we need both, you know. Okay, so I rest my case.
Vice President and Treasurer of the International Finance Corporation expressed optimism in Rwanda's speedy progress, announcing the entry of the Rwandan franc into the Euroclear eligible currency list. This means that up to 2,000 financial institutions can issue and trade in Rwanda's national currency.
And most of the clearance is done by Euroclear. Therefore, having the currency as an accepted Euroclearable currency is a prerequisite to create an offshore market in a currency. So this is a technicality, but an important technicality. The inclusion itself does not change a credit outlook of a country, but certainly does gain attentions from international investors. Now you have more investors when they look at the eligible currencies. Now they see Rwandan franc is eligible. Some of the investors may become more interested and do their own credit analysis. If they believe in the fundamental economic story, they may become interested. And now you have more investors interested, starting from the offshore, and hopefully eventually they would be interested in the onshore market too.